Good day everyone. So we've just finished our first quarter lessons and today we are going to start another topics or lessons. But take note whatever you've learned on our previous lessons, it should be intact and still with you because it is very useful for us to continue on our current lessons, okay? So let's have a quick recap first. So we have here the whole accounting cycle. So as we all know, accounting cycle is just a set of accounting processes, okay? So this I believe we have discussed the journal entries. So take note whatever you've learned about journalizing, it is very important because we cannot move on to posting the ledger accounts without the journal entries. And we cannot also prepare an adjusted trial balance without the ledger accounts. So you can see the importance of each steps because without this one, we can no longer move on to another step, okay? That's why it is a step-by-step process. And each period, this accounting cycle will still be prepared, or the whole process of accounting process will still be prepared, and it should be done again. Okay, so journalize, ledger, and adjusted trial balance. You have adjusting entries. You prepare adjusted trial balance, preparation of financial statements. You close. We have the closing entries, and we have the post-closing trial balance. Okay. So, as I've mentioned earlier, we cannot post to ledger accounts without the journal entries. So let's go back and have a sample business transactions for us to journalize, okay? So let's have the sample business transactions. First transaction, on December 1, 2019, Mr. Donald Gray started Gray Electronic Repair Services by investing 10,000 pesos. So, this is a transaction involving owner's investment. Okay? So, the business received a cash, so that is our debit, and the credit is the source of the cash, which is Mr. Gray, or the account title for that is Mr. Gray Capital 10,000. So this is our journal entry which is recorded on the general journal. Okay, if you still remember, the general journal is a record of original entries. So whatever transactions or business transactions that could affect the resources, katong 5 financial elements, you have to record that one on this book which we called general journal. Okay, don't forget that the journal entries should be recorded on the general journal. Okay, so this is the journal entry for this particular transaction. So we have the date here, December 1, with debit, account title cash with the amount of 10,000, and credit, account title Mr. Gray Capital with the amount 10,000. Okay, always remember, your debit amount should always be equal with the credit amount. Okay, next transaction. The second transaction, which is on December 5, Gray Electronics Repair Services paid registration and licensing fees for the business, 370 pesos. So, what was being paid? It is registration and licensing fees, which commonly we refer the account title for this particular expenses as taxes and licenses. So taxes and licenses is an expense account, okay, which is allotted, of course, for registration fees, licensing fees, and taxes. So this is a general expense account, taxes and licenses. So this is what we've debit, 370. And what was parted from the business? Of course, the cash that we paid for the registration and licensing. Okay, so again, we have the date, and our debit is taxes and licenses, and our credit is cash. Okay, both amount were 370 pesos. Next transaction, we have the third transaction on December 6. The company acquired tables, chairs, shelves, and other fixtures for a total of 3,000 pesos. So the entire amount was paid in cash. So what was received by the company? Ang nadawat sa company kaning tables, chairs, and fixtures, other fixtures. So the general account title for this, basta ing-ani nga mga asset, we refer this one as furniture and fixture. Since this is what the company received, so this is the account title that we should debit. Okay, so here is our journal entry, furniture and fixture, worth 3,000, and we credit, of course, what was parted from the company again is the cash, worth 3,000 pesos. Okay, again, if you will prepare your journal entries, don't forget the debit account title should be indented. Okay, next, the fourth transaction, which was on December 7, the company acquired service equipment for 16,000 pesos. The company paid a 50% down payment, so since it was paid, it is in the form of cash, and the balance will be paid after 60 days. So the remaining 50% was in the form of credit. It means giutang. Okay, let's have the journal entry for this. What was received by the company was a service equipment. So it should be the account title that we should debit 16,000, and what was credited is the 50% down payment. Ang gibayad nga cash 50% worth. So 50% times 16,000, that was 8,000. And the remaining balance, which is utang, so we use the account title, accounts payable, worth also 8,000. Okay, next is for the fifth transaction on December 7 also, the company purchased service supplies on account amounting to 1,500. Okay, so the company received service supplies because company purchased. But take note, it is on account. It is not in the form of cash. So on account, giutang gyapon. So what was received by the company? It is the service supplies. Therefore, we will debit service supplies and credit accounts payable with the amount 1,500 pesos. Okay? Since you receive service supplies, debit, and since it is still not yet paid, okay, so on account pa siya, we use accounts payable as our credit. Next transaction, on December 9, the company received 1,900 for services rendered. This time, the company rendered a service, and the company received a cash worth 1,900. So it is the payment from the customers after the company rendered a service. So what was received by the company? It is the cash. So we should debit cash and credit service revenue. It is the source of such cash, okay, the revenue. So we credit service revenue 1,900. Okay? Next, on December 12, the company rendered services again, but this time on account. Okay? Meaning, the customer did not pay yet. Giutang pa siya sa customer. And the company has the right to collect the 4,250 at the end of their agreement, which is after 10 days. Okay, December 12, na-render ang service, ilang agreement, after 10 days, i-collect na niya, or i-collect na ni company ang utang of 4,250. So, December 12 plus 10 days, that is December 22. So, let's check that later on if nakakollect ba si company pagka December 22. Okay, but this time, let's focus first on what happened on December 12. Yun nga, the company rendered service, but giutang pa. So, what was given to the company was the right to collect. For that, we use the account title, Accounts Receivable. So, we debit accounts receivable and credit service revenue with the amount of 4,250. Okay, next. On the 8th transaction, which was on December 14, Mr. Gray invested an additional 3,200 into the business. So, this is another capital involved na transaction. And just like on December 1, si Mr. Gray may invest og another 3,200. Therefore, our debit for this is the amount that the company received, which is the 3,200 na cash. So, that is our debit. Cash, 3,200, and credit, Mr. Gray capital, 3,200. Next transaction we have, on December 15, the company rendered services to a B corporation. As per agreement, the 3,400 will be collected after 30 days. Okay? So, same with the previous transaction, nag-rendered na pog service and giutang gyapon. The cash nga 3,400 after 30 days pa ma-collect. So, therefore, what was given to the company was the right to collect. So, we use the account title, Accounts Receivable, that is our debit, and credit, again, service revenue, since this is rendering service, 3,400. So, this is our debit, Accounts Receivable, and credit, service revenue. Next transaction, on December 22, the company collected from the customer in transaction number 7. So this time, the company already collected what is due to him. Okay, let's go to transaction 7. Okay, so the amount that the company has a right to collect is 4,250. So therefore, what was something parted to the company is this accounts receivable. Because once the company received the cash, therefore, they no longer have the right to collect. Okay? So, that is the idea here. Let's go back to the 10th transaction since the company already collected. So, our debit is the collected amount or the cash worth 4,250. And what should be credited is kaning accounts receivable because we need to cancel this one because the company no longer have the right to collect because the customer already paid. Okay? So, i-credit na nato si accounts receivable. Okay. So, this is our debit cash because that is what we received, the collection from the customer, and accounts receivable. It is something that the company should parted to. The company doesn't have the right anymore to collect. Okay, so credit accounts receivable 4,250. Okay, next. For transaction 11, which was on December 23, the company paid some of its liability in transaction number 5 by issuing a check. Okay, the company paid 500 pesos of the 1,500 payable. So what was the transaction Okay, sa transaction number 5, the company purchase service supply but on account, meaning the company did not pay yet, giutang pa sa company ang service supplies. So that's why the company has an account payable worth 1,500. But what happened on transaction 11? The company paid some. Okay? Some, not whole liability nga 1,500. It means the company only paid the 500 pesos. So therefore, what should be debited is the accounts payable. Okay? We have to debit this accounts payable with the amount that the company paid. So, let's debit accounts payable 500 and the cash which the company paid to the wherever the company purchased its service supplies. Cash. Okay, don't be confused if the company pay it in cash or by issuing a check, because by substance, a check is still a cash. It's just that it is in the form of check. That's why we still use cash as our account title for this, okay? So again, our debit accounts payable, it will signify that our accounts payable is makwaan of 500 because the company already paid the 500 on December 23. Okay? So, next transaction. On December 25, the owner withdrew cash due to an emergency need. So, this is withdrawal. Again, pag withdrawal, we use the account title, owner, drawing, or owner, personal. Okay, so this is, the owner is Mr. Gray, so we will use Mr. Gray drawing, so that is our debit. And credit, of course, what was parted from the business is again the cash. Inkuha si owner of cash from the business. So our debit, Mr. Gray drawing, and credit, cash, 7,000 pesos. Okay, next transaction, on December 29, the company paid rent for December. So, the company paid for the rent. Okay, so our debit for this is the expense account, which is the rent expense, and credit cash. Okay, because the company pay for the rent. So this our debit, rent expense, and we credit cash. Take note, expense account are usually debited because these are their normal balances. Next transaction, which was on December 30, the company acquired a 12,000 short-term bank loan. The entire amount plus a 10% interest, which is payable after 1 year. Okay, for this item, our concern first is the 12,000 bank loan. For the interest, wa patay bariyan nga interest, we will only pay the interest after 1 year. So for December 30, what should be recorded first is the loan. So what was received by the company is the 12,000 pesos. Since the grantan man siya og bank loan worth 12,000. So our entry, our journal entry for this is cash 12,000. And of course, what should be credited is the source of our 12,000, and that is the bank loan, or we use the account title, loan payable. Okay? So, cash 12,000 and credit loan payable 12,000. Okay. And on the 15th transaction, this is our last transaction by the way, which was on December 31. The company paid salaries to its employees 3,500. So what was being paid is salaries. So we debit salaries expense and credit cash 3,500. So we've already recorded on our journal, general journal, the following journal entries. Okay? So in essence, we are done with the first step of the accounting cycle process. Since we are done with the first step, we are now about to go in posting to our ledger accounts. Okay? If you do still remember, on our previous lessons, I've mentioned that in accounting, we have two important books. Of course, the first book is the general journal. Okay? This is where the business transactions was recorded chronologically. And the second one is the ledger or the general ledger. It is the list of the transactions related to a specific account title. So it just records all past transactions of a company in that specific or particular account title. Okay? Every account title has its relative ledger record or the book of ledgers. So this is now the second step of our accounting cycle process, which is posting to our ledger, posting to the general ledger. Okay, when we say posting, it refers to the process of transferring entries in the journal into the accounts in the ledger. So we have the journal here, diba? We have the record in the general journal, and then we transfer the amount to what we refer general ledger. Okay? So again, every account title have its respective general ledger. For example, if we have the account title electricity expense, so it has its own ledger. And unsay makita sa ledger katong mga transactions nga naka-apekto ana nga particular account title. But for simpler presentation, instead of using this format or proforma, we have this what we call the T account. It is still tantamounting to general ledger but in a simpler presentation. Okay? This is a T account of cash, while this one is the T account of the trade receivable or accounts receivable. Okay? So instead of using this particular format, we will be using this T accounts. Okay? It is much simpler. If you compare this one, this is the usual general ledger in the practice. Okay? You have the account title here, and then the debit side and the credit side. But for us, we will going to use this T account as our general ledger because it is much simpler to create or to make, unlike the previous one. Okay? So, unlike journalizing, posting is much easier compared to journalizing. So let's have an example. So earlier we've recorded or make a journal entries for the 15 transactions, right? From December 1 to December 31. Now our job, which is the second step of the accounting cycle process, is to post these entries which is found on our general journal we will post these entries to our general ledger. Okay? Take note, the journal entries which is recorded on the general journal should be transferred to our general ledger. Again, general ledger is a record of transactions organized per account title. Okay? For example, si account title nga cash, na siya respective nga general ledger. Si account title nga Mr. Gray Capital, na siya corresponding general ledger. Same with taxes and licenses, furniture and fixtures, service equipment, accounts payable, service supplies, service revenue, accounts receivable, and so on. So, each of those account titles have their own general ledger. So, what should we do in posting? Just like what I've mentioned earlier, we will just transfer the amounts. Okay, for example, okay, we have this T account. Again, T account is a simpler presentation or representation of a general ledger. So, for example, this is the corresponding general ledger of the account title cash. Okay? So, we will just search on our general journal all transactions related to cash. Okay? On the left hand, in this part, we will put all the amounts which were debited, while in this right hand, okay, we will put all the amounts which were credited. Okay? Kung gi-debit si cash, o ibutang nato diri sa left. Kung gi-credit si cash, ibutang nato ang amount diri sa right. Okay? Debit, credit. Okay? We will still apply that one in posting to our general ledger. Okay. On December 1, the cash was debited with the amount of 10,000. Therefore, we will transfer this amount to our general ledger. And since it was debited, so it should be written on the left side here. Okay, so in December 1, there is here the cash, 10,000 debit. So we will transfer in the left side, 10,000. Okay, on December 5, let's look if the cash, there is a transaction related to cash. Okay, there is. So, but in December 5, the cash is not debited, but instead, it is credited. So, since it is credited, therefore, pag-transfer nato sa general ledger, the amount should be written on the right side, which is the credit side. Okay? So, we will put the 370 here. So, we have, as a recap, 10,000 debit and the 370 cash nga gi-credit. Okay, so, same concept, we will go over each of the transaction and see to it if there is an account title named cash involved. So, kung naa, whatever amount of that cash, mo to'y ma-reflect sa tuang T account or the general ledger. Okay? So, December 6, the cash is credited also. So, since credit still, we will put the amount on the right side. Okay, what is the amount? It is 3,000. On December 7, do we still see a cash na account title? Yes, there is. And it was credited again. So, since credit ang amount 8,000, then we will put this one again sa right side. Okay, 8,000. On December 7, okay. Now, let's go on December 9. This time, the cash, there is a cash na account title and it was debited. Since it was debited, so therefore, this 1,900 should be put on the left side. Okay? 1,900. Okay, December 12, there is no cash involved. Let's go to the December 14. On December 14, as we can see na napoy cash. And si cash was debited. So therefore, i-transfer na po nato ning amount nga 3,200 on the debit side or the left side. Okay, 3,200 here. Next, on December 15, so we go over the transaction. There is no cash involved. Now, let's go to December 17. This time, nanapoy tayo cash. And cash was debited. So, pag debit, na-debit siya. Therefore, we will transfer the amount to the left side or credit side or the right side. Of course, since it is debit, it should be transferred to the left side. Okay? So, we put 4,250 in this side. Next, on December 20, okay, another cash transaction, but this time the cash was credited. So, basta credit, is it the right side or the left side? Again, since it is credit, then we should put this one to the right side. 500. Okay? December 25, again the cash was credited again, 7,000. So we will put another 7,000 on the right side. Okay? December 29, there is another transaction involving cash, 1,500. So it was credited, therefore we should put 1,500 on the right side. Okay? Next, on December 30, the cash was debited. Since it is debit, the 12,000 amount should be put on the left side. Okay. And on December 31, last transaction, the cash was credited. Since it is credited, therefore, it should be put here on the right side. Okay? The 3,500. Okay. So that's how you will post the amount to the general ledger. So since you have all the related values, this time we will foot these values. Okay? Unsay footing? Footing is just adding these two columns. Okay? We will add it up. Okay? So 10,000 plus 1,900 plus 3,200 plus 4,250 plus 12,000. Okay, we foot this side and we have a total amount of 31,350 for the debit side. Next, we will foot the credit side, 370 plus 3,000 plus 8,000 plus 500 plus 7,000 plus 1,500 plus 3,500. So therefore, for our credit side, we have a total amount of 23,870. And then the last part is to sum it up or find the difference. We will just deduct, okay, whichever is higher. Dila na to didakan. So 31,350 minus 23,870. Do the cross footing. So we have an amount, again, 31,350 minus 23,870. So we have an amount of 7,480. So guys, if after footing, the account title or the general ledger of that particular account title still have a balance, okay, we refer that one as open balance or account titles which has open balances. But if ever si debit o si credit has the same balances, so kung i-minus na to sila, since they have the same balances, so ma-zero out sila. Okay? If that happens, so we refer that one as closed accounts. Kay wala na sila balance. But since In our example, si cash na account title still have an open balance amounting to 7,480. So, a debit balance, specifically a debit balance, because debit side is higher compared to our credit side. Okay? So, that's how we will post the entries from the general journal to the general ledger. So again, each account title should have its related or corresponding general ledger. But we will use this T account as a simpler representation of our general ledger. Okay, so our sample general ledger for this transactions or journal entries, we have this one, the cash, general ledger for accounts receivable, service supplies, furnitures and fixtures. Next, for accounts payable, we have this one, loans payable, Mr. Gray capital, Mr. Gray drawing, service revenue, rent expense, salaries expense, and taxes and licenses. So overall, these are all the general ledgers related to our journal entries. Okay, so how it was done, it is still the same process from what I've discussed earlier. Okay, so after posting to the ledger, that is our second step, we will go to the third step of the accounting process, which is the preparation of the trial balance. What is this trial balance? Trial balance shows a list of the ledger accounts under balances, meaning a typical list, diba? So, a while ago, we make ledger accounts and have their balances. We do footing. Okay? Now, in the trial balance, you will list out all of those account titles which have open balances. Itong napay remaining balance, it's either binashay debit balance or credit balance. Okay? So, we will create a list of all those account titles that have open balances. So how should we create this trial balance? So in order for us to create trial balance, we have this proforma or format. Okay. First, we have the heading. Our heading, it is a 3-line heading composing of the name of the company. Second line, an adjusted trial balance, and the last or the third line is the date which the period covered. So unsa nga period siya na covered. So for example, that was on our example, that was on the month of December. Okay, name of company, then we write an adjusted trial balance and the date which is December. Okay, so we put this as our subheading. Account titles, what are under the account title? Of course, katong mga asset nga account title, first in line is ibutang sa ilay down sa nato ang list which belongs to asset. So mga asset nga account titles. After listing the account title nga asset, next is the liability na account titles. Next is the owner's equity account titles, and then the revenue account titles, and lastly, the expense na account titles. So for example, if na kay cash, okay, then nahuman na nimo tanag list down ang asset account titles, liability na po. So for example, si accounts payable, si loans payable, and so on. After listing all the liability accounts, you will now proceed to listing the owner's equity account. For example, Gray Capital, Gray Drawing. Next, we have the revenue account, which is the service revenue, and expense account, for example, katong taxes and licenses, salaries expense, and so on. So after listing, of course, you will put its related amount. It's either debit or credit. Depende na kung unsay balance nila sa ledger nila. Diba? As you remember, natay ledger gibuhat earlier. And lastly, we will total the amount. Total the debit and total the credit. Once it is balanced already, ang atong total debit is balanced to the total credit, we will double rule. Double rule is underlining the amount 2 times. Okay. So let's have an example. So this is the example of a trial balance. So if you look this one, this is our heading, which is the name of the company, Gray Electronic Repair Services, an adjusted trial balance, and the date, December 31, 2019. We have the account title, so of course, ang nakalay down or nakalist first is the account title na belongs sa asset, just like cash, accounts receivable, service supplies, furniture and fixtures, service equipment. Okay, so after listing out all the asset, we will move on to the liability. So the liability accounts are accounts payable, loans payable. After the liability account titles, we have the owner's capital na account titles such as Mr. Gray Capital and Mr. Gray Drawing. Then we have the revenue account, which is service revenue, and our expense accounts such as rent expense, salaries expense, taxes, and licenses. Okay, so after listing out all these account titles, we will look for their corresponding balances as to what we've prepared on the general ledger. So let's look at the cash first. Pila ang balance niya or the final balance. Okay, so we have here. So as of December 31, ang atong cash has a debit balance of 7,480. So, diba, this is what we prepared earlier sa ledger. So, if we cannot do our general ledger, therefore, we cannot prepare a trial balance. Okay? So, since we have already the amount, 7,480, then we will just put that one on the debit side, 7,480. So, cash, 7,480. So it follows with the other account titles. So for example, accounts receivable, we have 3,400. So we put here 3,400 debit balance. Service supplies, we have debit balance 1,500. So we put 1,500 here. And also for our furniture and fixtures, debit balance 3,000. Okay, so we put 3,000 here. Okay, let's go to accounts payable. So when we look at this, our accounts payable has a credit balance, okay, since the credit is much higher compared to its debit balance. That is, the debit balance is only 500 pesos, while the credit is 9,500. So therefore, we have a final credit balance of 9,000, which this amount shall be reflected on the trial balance that we've prepared. So therefore, our accounts payable here, 9,000 under the credit side. Okay, next, the loans payable. Okay, so our loans payable has a credit balance of 12,000. So we record 12,000 also here. Next, our owner's equity na account, which is Mr. Gray Capital. It has also a credit balance amounting to 13,200. Therefore, sa itong trial balance, ang ma-reflect na amount Mr. Gray capital is a credit 13,200. Okay? Next, Mr. Gray drawing. Here we have the drawing. A debit balance amounting to 7,000. Okay? So what should be reflected is a debit balance worth 7,000. Next, service revenue. Let's look at the service revenue. So, okay, the total amount for our service revenue is a credit balance worth 9,550. Okay, so the 9,500 should be reflected in our trial balance. And here, we credit 9,550. Okay, now let's have the expenses amount. Okay, for rent expense, debit balance 1,500. For salaries expense, still, debit balance 3,500. For our taxes and licenses, a debit balance of 370. So these amounts should be reflected on our trial balance. Okay, so here, at expense 1,500, salaries expense 3,500, taxes and licenses 370. Okay, so after doing such, nanatay amount sa tong debit and amount under our credit. So we will add it all. So i-add na to tanang amount under debit and also add na to tanang amount under credit. So after adding, both amounts in debit and credit should be equal. The moment that the amount are not equal, therefore there's something wrong with our process. Okay? And you have to go back again from journal entries and see to it aha ka nagka-mali. And you check after sa imong journal entry sakto man, you go na pod sa ato ang general ledger. Baka na mali ni mo plus ang mati accounts. Okay. That's how it is very connected with each other. Once nga mamali lang ka sa first step, then it is expected that the output of your next step accounting process, there's already something wrong. Okay? So that's why it's very important for you to be careful in every step of the accounting cycle. So once that your debit and credit is equal, you double rule the amount. Double ruling signifies that you already have equal balances. Okay? So you double rule or underline it twice. For 43,750, double rule, debit. You credit 43,750, double rule. Okay? So this is the third step of the accounting cycle. Take note that this trial balance, as what it is written, its purpose is to test the equality between total debit and total credit. Okay? But initially, yes, it tests the purpose nga equal si debit o credit, but it has limitation. Meaning, it doesn't mean that they have equal amounts. Your entries are already correct. Okay? That is the limitation of the trial balance. Okay, just take note of these items or points wherein dili nato makit-an sa trial in preparing trial balance. I mean, these points are the things nga dili ma-oversee just having a trial balance. Okay, first point is a transaction may have not been recorded in the journal. So there might be transaction na wala na record sa journal, but still, our trial balance is in balance. Okay? But, with this, dili ma-record kay walay recording na hitabo, dili po nato na makita ang trial balance nga wala day recording. Okay? That is one point. The second point is a journal entry may not have been posted in the ledger in its entirety. Okay, there's something wrong because again there is something omission. But even though there is omission, the equality between total debit and total credit won't be affected. Okay? And the last point is that a journal entry may not have been posted in the ledger in its entirety. Okay? So, these omissions will not be checked just preparing a trial balance. Again, the main purpose of the trial balance is to test that your total debit and total credit are equal. Okay. So that's it. So for today, we've tackled the second step and third step. So let's have this accounting cycle process again and see to it where are we now. So okay, we're done with journalizing, analyzing, and journalizing business transactions. We're done with it. Next step is posting to the ledger. So we are also done with it. And the next step is preparing an adjusted trial balance. We are also done with this. Okay, so out of this accounting processes, we are done with the first three processes. Okay, and the rest of the accounting process will be discussed on our next topic. Thank you, everyone.